extra calories. I definitely had some calories this weekend. Happy Thanksgiving, Kay, and everyone. Hey, happy Thanksgiving to you, Mel, and everyone here. Um, yeah, I had a lot of food. Well, I mean, I'm pretty picky, or I try to be healthy these days. But I got to go eat House of Prime rib yesterday, so that was delicious. Um, sorry, I'm just waiting 10 seconds here. Good morning, Kay. Had a very good Thanksgiving. Hope you did as well. I definitely did. I got to play board games with my family, so that's always fun. Got to play board games. I also play that, was it Rich Dad Poor Dad Cash Flow game? That was actually pretty interesting. It was like a trick to get
What?
the kids to play to learn accounting, to learn how to read like financial statements, right? Income statements, balance sheets, not cash flow statements, but it's a very fun game. It's an expensive game. It's like $100 for that game, but yeah, I got to try it out over Thanksgiving here. So, yeah, fantastic. We also had a short market week as well. So that always, forces us to be more educational, or forces me to be more educational. In which case, I do want to go over that AI report today, and I forgot to pull that up. Is what I'm reminded. So give me just 1 second here. Let me pull it up, see if I could find it somewhere in my history over here. Nope, not that one, not that one. Here we go. Uh, so we got two of those reports, which I want to go over. What else? Yeah, I mean, markets are slow right now just because we had holidays in a short week, but I would say we had fantastic performance on just like a Friday alone. So I'm not sure if you watched the Friday action. I certainly did. I mean, I was in the car, but markets close here at 10 a.m. Pacific Standard Time on a Friday because it was like a half day, but I think markets did really well. So you guys remember my thesis, right? So one of the theses that I have out there in the marketplace, again, I'm generating trade ideas left and right, but this is one of them, and this is one of my big conviction plays right here. So I think I got over, I don't know, let's just say I have contracts and hundreds of contracts on this one, hundreds of options contracts, all right, not shares. So yeah, Apple continues to do really well. I've been saying it for I think the last 30 days. Actually, the last 60 days was when I identified this trade, and I said that it looks like there's a large institutional player that's been accumulating this for the last, well, more than 2 months, right? Last approximately 5 months. Yeah, really approximately 6 plus months. Some big player has been accumulating this, and so this one's been working its way up. I mean, I'm not the big player, right? I'm also accumulating hundreds of contracts on this one. But if this one, goes well, right? The forecast is if this thing could run, well, first of all, how much do you guys think Apple could run, right? You gotta in options, you kind of have to like forecast like what's the potential run. So now that this one is potentially in play, or I've been patiently waiting, um, I'm guessing for sure it has to run a minimum of 10%, right? So you kind of know where I'm betting my contracts over here. Right now, it's kind of risky because what I'm exposed to is the time to be correct. Because if I'm wrong, then all those contracts just basically expire worthless, and I lose my money. But if I'm right, well, let's just say you could get winnings up in the multiples of whatever, right? 5, 10x, whatever. But yeah, this is one of those conviction plays that it doesn't always like come around, but I do like the setup. I do like the narrative, and I mean, I guess like somewhat of a narrative. I mean, everyone knows Apple, right? But we also know that this is one of Warren Buffett's biggest position, right? If we look underneath the hood, who owns this one, which we will later today. So yeah, this is one of my high conviction trades right here, right? Um, Again, it doesn't always come around, but when it does, I guess at this point I want to bet really big. So we zoom out, right? Technically, Apple is, zooming out on the monthly over here. Technically, Apple is all-time highs, right? So what do you folks think? A lot of folks would say, "Oh, that's too expensive. Is that all-time highs?" But we're talking about the market cap leader here, right? We're talking about a $3.6 trillion company on its way to make even more all-time highs, in which case the S&P 500 is also making all-time highs, right, in the last, Friday trading session. So market environments are really good right now. And so if I were to think about, if I was like a large institutional fund, in the world out there, one of the largest on the planet, I always have to be because my nature as being the largest fund on the planet, let's say, again, we're assuming here, I always have to be detecting where inflation's going, right? What things are inflating. So if the largest stock in the stock market is getting bigger, what do you think I would have to do as the largest institution in the game, right? So I think that institution has to pay attention to it. So that's why I'm thinking. That's my logic right here, right? It's sort of like a you're thinking beyond beyond what I want. I'm just focusing on the trade right here, and if it plays out, it plays out. Again, I could also be wrong, and it could also go the other way, in which case I run out of time, right? So I have everything from like next week, next 2 weeks, 3 weeks, 4 weeks, next to up to a quarter. So I got a lot of combination contracts on here. Um, but yeah, that's just me sharing like one of my high conviction trades right now. I definitely think it plays out. It would be fantastic. Like I would be on cloud nine if this thing goes up 10%, right? 10% meaning we hit about 260, which I think you could definitely hit. Hold on, let me remeasure that real quick. Let me see real quick. I mean, there's also the Bitcoin trade as well, right? I'm also playing those. But 10%, yeah, about 10% would be a 260 hit. So this would be a 9.3% move right here, right? So if we can get this 10% move before year ends, that'd be fantastic. If not, then yeah, I'd probably just start selling and just take the loss. But that's the name of the game, right? You gotta be comfortable with the fluctuations. But yeah, there's a lot of things going on in the marketplace right now, guys. Let's look around. Look at the S&P 500. Not sure if you folks are looking at this one, but as I was just saying, this one's moving into all-time highs, right? So market conditions are very good right now. This was like last Friday's performance right here, right? We got a little bit of a move out of that $600 area. Now we're at 602.55. So I think, I think things look pretty healthy. We screen around, right? Just to calibrate, do the holiday calibration over here. What's going on with S&P 500? What's going on with Nasdaq? We're putting in the hours into the charts, right? You got to practice your eyes, practice your comfort, your ability to scale, your experience in the marketplace, the history, the quantitative financial history or whatever. We're just looking around. We're just doing the grind. So QQQ right here, right? Nice, nice move up. Continue to move up. I mean, it's still holding up. The key thing that I notice on this one for you folks is again, I like the robot to draw for me or the automated drawing and let it tell me objectively what the markets are seeing. So yes, we do have like, sort of like a rising wedge right here, one could say. But I'm just really looking at this bottom support line, and I think we could probably rally above this top resistance line right here as well. So I think markets look pretty good, right? Nothing too concerning yet. We could plug this into the $8,000 indicator, get a feel of that as well. But that's what I'm seeing on NASDAQ right there. So NASDAQ continues to respect this nice trend line right here, right? Which is healthy to see. A break of that trend line, then you have your first line of defense broken, and you might want to consider, being less aggressive. But right now, I'm still, I would say, it's still full aggressive. Um, the green light. What can I say? Let's look at Dow Jones real quick. Catching up on all these indices right here. I don't know if you do your homework every week, but I try to do my homework every week, or as much as possible. I try to talk about markets every freaking day now. I think that's like the goal moving forward, right? Now that I've become an old man, but quote unquote, Lily says I'm not too old yet. Just kidding. Okay, so looking at Dow Jones over here, what do we have right here, right? Break of the top resistance line that continues to push up higher. So also very healthy on the Dow Jones Industrial Average. I like that. And then last but not least, let's look at IWM, just so we get a feel of what's going on with the rest of the markets before we start, diving into specific tickers and stuff like that. So looking at this one right here, right? IWM, this is very healthy right here. Nice move above, nice retest right here. So I love it, love, love, love when we retest, prior resistance becomes support, right? So previously we had resistance right here, right? Resistance right here. Again, I don't know if you folks could see that, but we have resistance here, so, creeping up, but not really resistance, but resistance again. Broke out, big volume came out, retested the resistance, becoming support over here, and now we're moving higher. Now we're attempting to move even higher. So IWM could be a fantastic play. Now that we're finally going to all-time highs with this one, right? Hold on. Is this all-time highs? Yeah, it looks like we are at all-time highs. Um, Man, that's wild. So yeah, lots of plays going to be setting up. I think it does seem like Santa Claus will come this, the Santa Claus rally will come this December. So that's something to anticipate, right? Markets all around look pretty fantastic at this moment. So Yeah, I like what I see, folks. Going over to the other part right here, we'll go over to just looking at the international markets real quick, just to quickly calibrate. How's it going over in Japan, right? How's it going in Japan or Asian markets, and how's it going in European markets? So again, I keep it simple. I'm just tracking like simply the 200-day moving average. The 200-day moving average will be my guide in terms of like, is this market going up or down? So yes, this one is objectively below the 200-day moving average. But from there, it's like you have to start calculating or start looking at the next area of support and resistance. So now we're currently right here. So this is the what we're looking at. Now we did have like a huge correction, right? Huge sell-off correction right here in Japanese Nikkei, which it corrected 27%, and then now it's just like making a comeback, right? So yeah, I mean, if we can get back up, it'd be full on globally bullish. But right now, we do have some lagging action in the Japanese markets. Then looking at the European markets right now, right? So same thing with the European markets. It really seems like the USA is leading the way from what I'm seeing right here. European markets also below the 200-day moving average, which is the pink line right there. Looking over with the DAX, the German DAX, that might be a little bit different if I recall, but let's just double click. Yep, there we go. So look, so sometimes like you look at the European markets, and again, you could look at all the other indices as well, right? There's also the Hang Seng, there's like the Singapore index, et cetera, et cetera. But I mean, these are like they're pretty much like the large ones that are pretty important to look at. So yeah, looking at the DAX right here, like again, the difference is like you have the European markets, the Stocks 50, those are not as bullish as as the German DAX over here. So German DAX looks fantastic, right? So if we can get the other indices moving on as well, that'd be great. Then finally looking at the VIX right here, just to assess the level of volatility that we have. I love the fact that we are now below 15, right? 15 is ideal for a swing trader. So I really think that we're moving into a moment of like the next 30 days would be a very strong swing trader environment, from what I see from just assessing the macro, right? Now, in terms of like other concerning pieces and stuff like that I would be looking at is this, rallying dollar right here. But again, the dollar could rally, but it doesn't mean anything until it means something, right? Like the markets won't react until it reacts. So looking at the dollar right here, I do see, just it hitting resistance right here. So this could be a bearish trade activated right here, a bearish trigger trade right here for the dollar, which means the dollar might be going back to the 200-day moving average, right? But we have to like fail some of the moving averages over here. So dollar looks, I would say, it was like, something macro fear or something to fear at the macro level, but right now I think it's fine. Again, markets won't take it seriously until it really becomes a serious thing. Now, the cool thing is that we have rates. We look at the 30-year bond right here, right? I love the fact that prices are moving back above this 200-day moving average. I know it's like a lot of like above, below 200-day moving average, but that's just how institutions, I guess, define direction. So the fact that we're moving towards the 200-day moving average here, if we can continue to go up, this is suggestive that interest rates are moving down, which is suggestive of a very favorable environment for, well, the overall markets, right? So again, that's the quick macro, folks. Now we know at a high level what's going on. We can look at energy and stuff like that as well, but there's no interest in energy right now. Energy seems to be floating up and down below the 200-day moving average for quite some time. So, I know folks like Bernard asked about, hey, what do you think about, Chevron or energy right now? Well, it won't move until like we get some capital deployment into the space. And so as long as like we're below the 200-day moving average, it's more like capital distribution than capital coming to this segment is what I'm saying. So that's what I'm seeing at large. In terms of like segment performance, we could go into the portfolio real quick. Oh, not portfolio. We can go into the groups right here. We go into groups and we can look at the last, like, let's say 1 month performance, and we see what sectors are hot. So our last three months actually. So last 3 months we can see like cyclicals and stuff like that are outperforming. So cyclicals, I believe things like Tesla and Amazon, consumer discretionary, those will fall into that basket right there. Financials are also performing. Communication services, so things like maybe Google, but Netflix has been really performing, right? Netflix and also Disney. Disney's been performing, so that's coming off of a nice low. I mean, Disney probably at this point, again, I don't want to boldly say this, but this is just an opinion from like what I've seen in the marketplace, right? I think Disney has found its lowest price it'll ever be for the rest of my life, unless like some dramatic, chaotic event happens in the world. I just don't see it going lower. So this is like I think Disney has reached the lowest bottom possible in this cycle, in this cycle of a lifetime. Um, because like I mean, just look at the charts right here, right? So this is Disney right here. Now it could go lower, right? I could be wrong here, but this is my thesis right now. My thesis is like I do see a lot of like volume right here, and then previously all back into like 2005, there's way more volume there. But what I'm seeing is like this is, this area right here, maybe like within this range right here, that highlighted range right there is like the lowest I think Disney will ever go in it for the rest of my life. Because just judging from like the political decisions that are being made at the top right here, I do detect, a very, I mean, it's just like in the grand scheme of things, if you just analyze like 1,000 years, right, 1,000 years out, like every government will print money, every and that's what we're seeing at the top, right? It's just the same narratives over and over. So if that's the case, then finite things like this, especially if the shares are not increasing over here, we still have a billion, 1.8 billion shares right there. This is again could potentially be the lowest possible price right here, but I could be wrong, right? Now that's what I'm saying. Risk management is paramount, right? You design a thesis, which is like your opinion, your framework opinion on the markets or on a stock and what direction you think that stock could go, and then you draw out the risk and reward and stuff like that, right? So my thesis is that I think this is the lowest that it could ever go, but if I'm wrong, risk management is paramount. Then if it goes below 80, then just stop out, right? You have to be willing to be wrong. It's about like just have a you don't have to be right most of the time. You can be very successful just being like 30% right. It's a matter about risk management being paramount. Mel says, what does AK indicator say on Disney? Well, the AK indicator, depending on how you look at it, I mean, if you look at it right now on the daily, it's saying bullish actually. So at least I detect bullishness. Look at this, beautiful, right? So check out the AK indicator right here, right? So the AK indicator was saying green, 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 green back in. So what date is that? Sorry, back in like, well, this could be the beginning one. The first one was October 21, right? October 21, and then it's been saying green. Even the earnings event post earnings is still green, so we're still in position based off of this indicator right here. So this is like very bullish, um, right? So it'll tell you when to sell. It's not always perfect. Look, if you look at this one right here, the prior bullishness over here, so you got some green indicators. So it said go long, long, stay long, stay long, stay long. It still says long right here, but then it switched to red. That would have been the sell right there. Sell, 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 and then that sell would have worked out really well. And then now it changes color. So you want to sell when it becomes like this color, and then you want to be long when it's like the teal and blue. So very 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 nice indicator, like very well worth the money in my opinion. Um, but you got to like the only thing that's important is that you got to do the work. Sorry, I got this alarm going off over here. Let me just change that. Might have been a squirrel that walked by one of my sensors in the backyard over here. So let me just turn that sensor off. Oh, okay, hold on. There was definitely a squirrel hanging out there. So all right, turn off those sensors. Okay, so excuse me. So yeah, this is what the indicator says right here. And I like this one too. Like if you tell me like, what do I like in the markets right now? Like I definitely would not, okay, not investment advice, but this is a buy 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 buy. I would buy 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 this one. And I did buy 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 this one actually. I bought like, before earnings. I bought like yeah, I held through earnings because I was just thinking like, all right, let's just play it out. But then this would be like buy 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 add. So yeah, I think this one looks great, but you gotta be careful, right? So just because I think something's a buy, again, not investment advice, it's just you gotta manage risk. Like managing risk is what takes you in the long run, because you like it gives you another chance to like play another trade, right? Like it gives you another chance to come up with a thesis again and then play again. But if you're not respecting your risk management, then you're just giving your money away. So that's something that I to this day I still work on, and I think I'm going to be working on risk management for the rest of my life, especially if you want to engage in this game for the rest of your life. Okay, so that's Disney right there. Going on to the next one. Let's see. Well, I mean, I really like that Apple trade. I do want to revisit like Coinbase and stuff like that because right now crypto, right, especially like Bitcoin's making fantastic moves, and there's a lot of like janky things going on in the crypto space as well. And now being a little bit more mature in the different cycles that I've experienced, I'm going to be a lot more resilient this time around because like before in the early days, I would take other people's opinion quite, I wouldn't say seriously, but like it would have an impact on like how I look at things, right? But nowadays it's like I don't really. To me, it's like here I'll show you. I'll show you from my other screen right here. Like you might see on the right side, I have like a ton of meme coins right here. Like, yeah, I'm playing those as well, right? It might be the stupidest thing in the world. I agree, it is the stupidest things in the world. But you need to be very objective based and look at what's going on, at top with the boomers, with the political, politics and the boomers at the top, and then you also need to objectively look at what's going on at the bottom with the Gen Z and the new Alpha I generation or whatever that's coming online eventually, right? It's like this is like the new crypto narrative that's developing, and at this new now I'm a little bit older, right? Now that I'm a little bit older after this weekend over here, um, I'm starting to feel like a baby boomer. Just kidding, a digital baby boomer, you could say. But there's a lot of like younger generations that are newly joining the workforce or out of college and making money, and they're going to be throwing their money at stupid things. So the way I see it at this point is like I don't complain. If it's a stupid object, as stupid as like something like a fart coin or like like a AI coin or whatever, yeah, like if the players are going to play it, then so be it. If they're going to play it, then yeah, it's going to go up. It's going to go up, and it's an opportunity to make money. So I think it's better to look at objective lens like that of like where the capital is actually moving and being deployed. So we look at Bitcoin right here. Bitcoin's just flirting like almost with the 100K over here, right? So I definitely think, I mean, as long as we hold strong right here, we don't sell off hard. Yeah, there is potential for just like the time, the lingering time or the lingering asset that deals with time, and then people are like, oh, it's still up there, I gotta buy it, and then boom, it goes higher. And if it goes higher, then well, more inflation, right? So you're gonna want to be in this game. So yeah, crypto is an insane segment, I would say. It's getting hot again, but it's up to you to choose to put down the ego and say, hey, look, like as stupid as it is, there's actually kids who are deploying or very young people. Like I said, I was not kidding with you folks when I said there's a 14-year-old kid who literally made like 30, 40, 50 million or whatever on meme coins. It is freaking insane. I know it's that stupid, but then if you actually run the mathematics, like if you think it's a lie, you run the mathematics, or you run the calculation, you double check a little bit, then you realize like, okay, that is a hot category, right? So if you go to CoinMarketCap right here, you see these fire emojis right here. The fire emojis basically shows like, hey, what the crowd is getting hot about, right? So if I were to think about the architecture of like, mental distribution or just how people are cruising around the internet, it's like I think the average person, the average individual, Gen Z, Y, X, or whatever, whoever's participating, the average individual might go into a centralized centralized market analytics platform like CoinMarketCap like this, right? And they're likely to go in here and they're going to be clicking on things. They're going to click around. They're like, oh, look, it's the emoji right here. They're going to click on the hot fire emojis, right? Because I'm thinking about their click path. The average person's likely click path and what they're likely to look at, because what they're likely to look at is likely what they're going to be influenced by. So they're going to be looking at this and they're going to see like, oh, look at these, these meme coins right here, right? So like Doge right now, $64 billion, and that thing's moving higher. Actually, Shiba Inu is actually moving higher right now as we speak. So yeah, it's very stupid, but remember, Bitcoin was stupid in the beginning. Anything in the very beginning that's stupid, like, but I, like previously, my previous version of myself, you could say, when previously when people say it was stupid, I would back off. But now it's like, all right, now you just look at the numbers, which is like I think is a more like optimized version of myself, where it's just like, look, if the capital's being deployed, it freaking makes sense. Like there's more like before anyone in here has a opinion of like how stupid it is, look at the pure like I could hide this asset class and say it's not Doge, it's not Pepe, it's not Bonk, it's not Shiba Inu, whatever, right? This random crypto out here, and I just show you like this just purely markets and chart, and you'd be like, whoa, this is a $64 billion market. Whoa, this is an $18 billion market, right? So it speaks a lot about the macro, right? Like how like it's like the internet is gobbling up these young folks who are willing to bet on these speculative vehicles. So again, just like the tulip bubble, right? Which at one point us humans were betting on tulip bubbles. This is just the nature of humans, and it's so fascinating, right? So just don't forget. Speaking of tulip bubbles, someone should make a tulip token. Maybe that. Oh shoot, that'd be money right there. Um, okay. Anyways, let me show you. That's actually interesting. Now that I think about it, that could be a money play right there. So the tulip mania, right? So remember, the flaw here is not, you know, if you're coming into the stock market for the first time and you think things are like very polished because it's finance, I think we all have that fallacy in the beginning, right? Where we think things are very polished, but in actual reality, the markets are actually like very like there's polished segments like enterprise software, and then there's also like the janky ghetto non-polished segments like penny stocks and meme coins, right? So I think just like if you were to aggregate both of those, it's just fundamentally they both have to exist. It's just the nature of the markets. So yeah, that's just my take on that. I find that very interesting, and I also find that no one has really spawned a tulip token yet because I think that probably catch a bid just because it's a culture thing, right? So anyways, understand that at one point humans were betting on this, when we had the tulip mania or whatever, right? Humans were betting on all this, and at one point a tulip could buy physical real estate or something like that. And this goes all the way back to the history of, like, look at the date right here, 1634, if that's even like the accurate date, but it goes back that far, right? So it just goes to show, like, humans will create these emotional cycles, and if you understand that maturely, and remove your ego and just say, like, hey, like, these are cycles I want to play. Well, you could be that 14-year-old kid who made like 30 million or whatever, right? So yeah, I like topics like this because it's like now it's like getting into like the